Salam everybody, this is Investor Shake back at it again with another video. And today's halal stock pick of the week is Target Corp, ticker symbol TGT. Stock price is at $161.61. And on Zoya it is seen as questionable, but I'll go further in depth. The key stats are it has a $99 billion market cap, an annual dividend of $3.58 per share. 52-week low is 183.24, which is a lot lower right now. And the high is 265.81. PE ratio is pretty fair at 14.37, and the earnings per share is $14.10. And let's take a look at Muslim Exchange. So on Muslim Exchange, it is seen as compliant. And let's take a look at a brief description of the company. Target is a general merchandise retailer selling products through its stores and digital channels, as in their brick and mortar store as well as Target.com. Its general merchandise stores offer an edited food assortment, including perishables, dry grocery, dairy, and frozen items. Its digital channels include a range of merchandise assortment, including many items found in our stores, along with a complementary assortment. The company sells assortments of general merchandise and food. Its format stores offer curated general merchandise and food assortments. The company manages its inventory in a range of merchandise categories, including apparel, accessories, home decor, electronics, toys, seasonal offerings, food, and others. It operates stores, including format stores in urban markets and on college campuses. The company's products categories include apparel and accessories, beauty and household essentials, food and beverage, hard lines, and home furnishings and decor. So in a way, it's your general merchandise store, and that allows you to buy essentials and everything you need. And I don't know if you've been to Target, but there are Targets of various sizes. There's the Target Superstore, which has a decked out grocery section, as well as clothes, electronics, home improvement, etc. And then they even have smaller versions in downtown areas and college campuses, which is a more condensed version of Target. So the company operates stores of various sizes, but they sell pretty much anything you could possibly want: food, clothes, electronics, school supplies, baby supplies, makeup, hygiene products, etc. And usually I see a lot of families going to Target. So it's one of the main stores that families would go to get baby products. If you're expecting a child, you'll probably go to the baby section, get some formula, some baby clothes, strollers. And it's an all-around store. And the business screen is that it does pass the business screen on Muslim Exchange. In the financials, it meets all three criteria. The debt to assets is below that 30% threshold. Debt to market cap was below 30%, which is good. So it is compliant on all three standards when it comes to measuring whether the stock is compliant or not. And part of the reason why it may be questionable on Zoya is the fact that since Target is a pretty large store, they sell a variety of stuff. It's possible that the Targets that you may be shopping at might sell pork products and alcohol products as well. So that's one thing to keep in mind as a halal investor. But again, the pork and alcohol makes up a small percentage of the items that they have available for purchase. And one of the reasons why I want to talk about Target stock is because it has had a pretty bad day because of its earnings report for Q1. Because it was down 25% in a single day. We would never expect that from a stock. But as you know, stocks tend to have bad days, and today's one of them for Target. But let's zoom out in the past year. Basically, if you bought the stock last year, you would have been down 21%. But let's zoom out even further. The past 5 years, the stock has gone up almost 200%. Because in 2017, it was as low as $51 a share. But over time, the stock price has almost quadrupled because it had good earnings over the years, great profits, a lot of growth. But because of this earnings report, a huge percentage was taken out of its valuation. So this does pose as a good buying opportunity because I don't expect Target to go away anytime soon. I don't really expect them to go out of business because they are a very successful company with a successful business model. And given that it is a general store, I do consider it to be a defensive stock when it comes to economic downturns, similar to Walmart. Yeah, but to see it drop this much is significant. And we don't know if this stock has bottomed out because right now we are currently in a bear market, so there is a lot of pain to experience in the stock market. And it's not really a good idea to test the bottom because we never know what the bottom could be for any stock. I remember talking about Coinbase stock a couple weeks back, which was at 120 when I covered it, but went even down to as low as $50 a share. So it really shows you that you can't time the bottom when it comes to investing because we don't know when the bottom is going to occur. So my suggestion would be to dollar cost average, especially if you've done the research on the stock and you're confident that it will rebound in the long term. And the key stats has a PE ratio of 11.46, which is smaller than what we saw at Zoya. So this would indicate that Target stock is undervalued at its current levels. And the 1-year target estimate is $273.93. So let's take a look at the financials. Well, first, let's take a look at the earnings and see how they've been performing. So in the past, since 2019, we've experienced year after year revenue growth, which is amazing, as well as positive earnings 4 years in a row. Then looking at the quarterly, as you see here, quarter after quarter growth and positive earnings as well. And then let's see what the analysts have to say. Now just know that this analysis data is before this recent earnings report, and it is shown as a buy with price targets as low as $161. Well, actually, no, as low as $225 and as high as $365. So in a way, these analysts were assuming that Target would continue its general uptrend into next year. But I guess this earnings report has really taken them by surprise because the current price is well below the low price target. So that's one thing to keep in mind, is that this analysis data may be outdated and the analysts may change their price targets given the recent earnings report. And then looking at the financials, net income is positive at $6.9 billion, which is really good. The balance sheet, they have $53.8 billion in assets and $40.9 in liabilities. So the assets outnumber the liabilities, which is a good thing. Long-term debt is at $11.3 billion, not too significant for the company. I do view Target as a blue chip company, and I do expect them to recover from this may not be this year, it could be next year or later this year, who knows. And lastly, I want to go over an article because Walmart and Target did release their earnings, and both their stock prices declined greatly after the earnings report. And it says here, analysts and investors didn't anticipate that Walmart and Target would take such a massive hit to their profits. So, like I said, this took a lot of people by surprise, because we would assume that the earnings report would go so well given how they've had year after year growth. But I guess this quarter just did not continue that momentum. So let's skip over to the Target section. Target said it is seeing a resilient consumer who have new priorities as the pandemic becomes more of an afterthought. They're shifting from buying TVs to buying luggage. That change showed up with purchases in the fiscal first quarter. Customers bought decor and gifts for Easter and Mother's Day celebrations. They threw and attended larger children's birthday parties, leading to a jump in toy sales. They also bought fewer items like bicycles and small kitchen appliances as they booked flights and planned trips. Comparable sales still grew despite that challenging comparison. Plus, traffic at Target stores and website traffic rose nearly 4% year over year. Sales growth numbers, however, would include the effects of inflation, which is making everything from freight costs to groceries pricier. Target last quarter also had a higher level of markdowns, a staple of the retail industry that more or less disappeared during the pandemic as shoppers had a big appetite to buy and retailers had less merchandise to put on shelves. So a lot of things are coming into effect that may affect the stock price. We have inflation, which is causing things to go up in price. Another thing is the supply chain. A lot of things aren't coming to the stores in a timely manner, which causes them to have a short supply. So I don't know if you've been to Target or the grocery store lately, but you start to realize that you're paying more than you usually do for your food and other essentials, which is a concern that's been growing since 2021. And we don't know when the supply chain issues are going to resolve. We don't know when the inflation is going to come to an end. It's just something that we're going to have to experience for the time being. And this is affected in the form of increased prices. So, they haven't said anything about fewer and fewer people shopping because, people need their food, people need their essentials. And they're going to buy it regardless of how the economy is doing. So this is one reason why I would consider buying Target stock while it is below $200. And I do plan on dollar cost averaging by buying fractional shares in the next coming months. Now, as always, I'm not a financial advisor, so please don't buy Target stock simply because I'm talking about it. This video is for entertainment and educational purposes only. This is Investor Sheikh, checking out.